Hi everyone. I would like to share a strategy which is quite simple for day-to-day trading. Hence why we have the time frame of 30 minutes. We'll write everything down. Time frame 30 minutes, right? So what can be traded with this strategy? So can do Bitcoin, indexes such as S&P 500, and FX pairs as it follows: Euro dollar, Euro JPY, Australian dollar JPY, USD CAD JPY. This is the pairs that we actually tested, and they've proven to be profitable in the long term. So then let's look what actual indicators we use. They're quite simple, standard, and basic. With a good strategy, the simplest the indicators used, the least amount of indicators, the better. So we're gonna use Parabolic SAR. Nothing to change to it, just leave it as it is. Then we're going to use the moving average. We need to make a couple of changes here, such as the 200, needs to be the 200, and make it EMA, right? And then the last one is the MACD, which I bet everyone is quite comfortable and knowledgeable of this indicator. So let's write them down. Parabolic SAR, standard, EMA 200, so we need to change it, and then MACD, right? So the only changes that were made were to the exponential moving average. Last but not least is the risk reward. So risk reward is 1-to-1. It's not ideal in many scenarios. However, if you have a risk reward of 1-to-1, you're expecting to have more successful trades. So now the conditions of it. Would like to explain these conditions with examples in going through a couple of trades. So once the MACD crosses above the line, it crosses downwards, we're looking for short positions. So somewhere it crosses. After the crossing, position is to be under the 200 EMA, and the parabolic SAR needs to be above. And then we have a risk reward of 1-to-1, right? Roughly 1-to-1. Okay, let's go backwards and find a couple more. Examples of how this strategy would work. Just pick up random data. So here's one other example. Okay, price have dropped under the 200 EMA. The parabolic SAR is above, and the MACD crossing happened above the zero line. So the MACD crossing needs to happen above the zero line. So this will be the entry point, will be the stop loss, and then 1-to-1. Well, let's see if it goes to the take profit, and it hits it right here, right? Let's go back a bit more, just randomly select. Here we go. Here's the crossing here. The crossing happens way above the zero line. And the parabolic SAR is around here. This is the opening price for the opening candle, and risk reward is 1-to-1. Unfortunately, take profit happens a lot quicker, and the price runs down, but this is the strategy. Also the same happens on the long side of things. So let's see if we can find a couple of longs. So this is, I could say this is borderline, but the crossing does happen below the zero. Then parabolic for longs, parabolic SAR needs to be below the price and the opening candle above EMA. And it takes the profit on the long side of things. Okay. Look at another short opportunity position. 121. And look at another. I was hoping I could find a loss around here. I'm sure there are quite a few losses as well. But as you can see, the risk reward is 1-to-1. However, there are many successful trades because price does tend to go back and forth on the EMAs and bounce off them and go through them. So to recap again, the time frame used, as you can see, is 30 minutes. These are the three indicators, and these are the instruments that can be used: Bitcoin, S&P 500, and the FX pairs. Of course, you can try for other ones. However, these are the ones that we found successful, and the risk reward is 1-to-1. Price opens below the EMA. PSAR is above for short positions. Risk reward is 1-to-1. The quick way to see it is that in order to see where the stop loss is, the PSAR needs to show up. So that makes it easier when to open actual trade. Thank you guys very much for watching.